How does an M4 GTS make sense? How does a GT4 make sense? How does a Turbo S make sense? How does a G-Wagon make sense? Now, everybody knows about the 6,000 pound rule, so I'm gonna get to that at the end of this video. But here's the things that you don't know. If you use a vehicle 50% or more for business, I can write off the mileage. I drove 30,000 miles last year, 65.5 cents per mile is what the IRS gives you. So $18,000 write-off against earned income. You wanna do upgrades? You use your vehicle for business, meeting with clients, marketing, taking meetings, in content, etc. That vehicle is gonna be seen with a window tint. You do an exhaust upgrade to it, I don't know, you make a video about it, it's a tax write-off. You can deduct the upgrades, you can deduct the mileage. If you pay cash for it, great. If you finance it, you can deduct the interest. So it's not just about the 6,000 pound rule. Yes, with a 6,000 pound vehicle, you can depreciate it because of Section 179. Then there's something called bonus depreciation, which allows you to accelerate more of that depreciation into the first year of ownership. But guys, what I'd be looking at if I were you is you have a vehicle anyways. You drive a car unless you're one of those liberal hippies in San Francisco. So what you want to do is if you're spending the money on a vehicle anyways, utilize it for business and take advantage of all the write-offs that you can, regardless of if it weighs 3,000 pounds or 6,000 pounds. I didn't show you, but the GT3 RS back there, I drove that 12,000 miles last year, all right? It weighs just under 3,000 pounds. It's a YSOC package, but every single thing that I could deduct out of it, the purchase price, the exhaust upgrade, window tint, tires, maintenance, the mileage, the purchase price, everything. And it allowed me to get about $40,000 of deductions. Now, if you're making 80, 100, 120K a year and you're not making $250,000 a year to justify a G-Wagon, still look at it this way, guys, because you want to be able to juice every ounce out of that vehicle as possible against your earned income. Then you want to look at other assets that can allow you to do the same thing. Investing in oil and gas, not the stock market, but the actual wealth. Investing in hard assets like real estate, like this building, so you can convert your earned income into passive income and then use the asset to lower your passive income taxes even further. Am I making sense, guys? Let me know your questions in the comments. I will answer.